Voxtur just had a conference call. I posted the entire conference call on my YouTube channel, and now I'm chatting with Colin, who was also on the conference call asking questions. Colin, what's going on?
Not much. How are you doing?
Good. So, what are your thoughts? Happy? Impressed? What are your thoughts?
Well, I think so. I'm impressed, but I think there's a lot of people who are looking at this, saying management said it was going to be flat, comes in moderately down, and I think when you look at the concept of people know the price of everything and the value of nothing. Well, price is a data set, and value is analysis. And I think in the context of what, when management gave guidance, they said, we expect it to be flat. But what I don't think they were prepared for is the fact that interest rates have gone screamingly high as sort of 2008. Originations have dropped to the lowest in 22 years. Refinances have fallen off a cliff. All of these elements were not, in my estimation, part of the guidance that they gave. I don't think they were anticipating that was going to be the industry backdrop for that guidance. But I think this is a fantastic earnings report. But it's because of, if you look at the content, if you think about engineering, engineering is all about, or science, everything is about stress testing either a theory or stress testing a product like a car or an airplane. In World War, I think it was in World War II, there was a whole group of engineers looking at planes that were coming back that had been shot up after a bombing run. And when they were looking at it, there was sort of this consensus amongst the engineers that said, oh, we need to patch and reinforce this entire area where all these bullet holes are. And there was one engineer, and when they were doing that, they looked at it and they said, if we do that, we're going to increase the weight of the plane significantly. We're going to reduce the range because of this rate significantly. But there was one engineer who looked at the problem and said, wait a minute, these bullet holes are on all the planes that have returned, and not the planes that have crashed. The planes that have all returned all have similar bullet holes. What we should do is reinforce where there are no bullet holes, because we know that the planes that have made it back have bullet holes here, and therefore they're able to make it back. It doesn't change the control services and the flight services enough. The plane's able to make it back. What we should be reinforcing is where they haven't been shot, because those are probably where the other planes were hit, and therefore that's where we should reinforce it. Turns out he was correct. They reinforced that area. The weight impact is de minimis, maybe not de minimis, but significantly less than what they were originally planning. So I look at this quarter as a function of stress testing the veracity of the statement that management has said, and that I have said, that this company has counter-cyclical revenues, and then in turbulent times, the returns are going to come back, that the revenues are going to stay flat or consistent or stable. And what I think we've now done is we've seen a true stress test. Who would get in a car that hasn't been crash tested? Who would get in a plane that hasn't stressed the airframe to failure? We want to know the stress tests on these financials. We just had an absolute massive stress test on this company. And what I think is also critically important is that foreclosures, one of the more important elements of the business line right now, still has one arm tied behind its back because it's not fully ramped up. So if you take all of that in context, in my opinion, that's the takeaway. Everyone can chirp about this or chirp about this or go into line item here and say this line item. To me, it's meaningless. They have said that their revenues and their gross margins and their gross profits are going to be stable in an adverse environment. We have an adverse environment, and we're seeing exactly that. Now, I have said that net income is particularly interesting. Now, people have said, well, net income has been beneficially impacted by FX, foreign currency exchange rate. Well, of course, that's correct. We report in Canadian dollars. And one of the features of having US dollar revenues, no one talked about last year where we were having major drags on our FX during a couple of quarters where FX was going against us because the Canadian dollar was going up when oil and gas was going up. They didn't talk about that. But in this interest, in any environment where the market is going to deleteriously impact real estate, well, you're going to have a run to safety in currency. And what's the currency of safety? The US dollar. And so this is not an anomaly that the revenues have been beneficially impacted by US dollar going up. That's a feature of this revenue because the US dollar will always go up, not always, but 99% of times when things get a little squirrely and people are looking for safety, they go to the US dollar. So to me, that's a feature, not a bug. And so I look at this and go, we just had a massive stress test. We don't have all of the systems up and running. Foreclosure has its arm behind its back. And I think that I look at this and go, management has told us that they have stable revenues, stable gross profits, stable gross margins in a downdrafted market. And here we have it. And now we see it proof positive. And we don't even have a fully functioning, ramped up foreclosure. So to my mind's eye, that's what I take out of this. Someone can pick me to death on 1,000 things. And you know what? I can go back and pick them to death on 1,000 things. It is not important. We have been told that this is what's going to happen. And now we have empirical evidence. And I think that if foreclosures hadn't had their arms tied behind their back, we would have had higher gross margins and we would have had higher revenues. So that's what I take away from this.
Well, it seems like foreclosures is one of the business that it is so spring loaded. We have more than one business division, and that it's on a takeoff. And you know the market is so much focusing on today, as I always say, the 3 inches in front of their face, just today. Interest rates are going up today, but you know what happens when interest rates stop going up? I mean, what happens when the inflation cools off? What happens when the Fed stops doing what it's doing? How is this going to impact Voxtur?
Well, I think a couple of points I'd make. One is, again, going back to the fact that pointing at the numbers is obvious. I can point to any number, but it's the interpretation of that. You know, it's seeing what's not obvious on in the data point. And you know, when you look at foreclosure has one arm tied behind its back. AOL is just ramping up. RPTA is just starting to ramp up again. Wealth is starting to ramp up. And so we have 3 massively important areas. And then I also think with A now that there's going to be an increase in adoption because as things tighten up in a company, they go around looking for means of reducing cost and increasing throughput for lower costs. So there's this, they want it both increase their ability to grow with fewer people because they're going to have to, a lot of them are going to have to do headcount consolidations or rationalizations of headcount. So I look at this and say, I think you're going to see that in a lot of their clients. They're then going to say, well, how do we maintain our throughput? And they're going to look for the technological throughputs of the ANOW, of the sketching software Apex, of the AOL. They're going to look for all of these elements that are going to maintain their ability to be competitive. And I think your point is valid when it comes to your analysis of what UWM, how well they did vis-a-vis their competitor Rocket Mortgage when, UWM did quite well. Rocket Mortgage took it in the teeth. And I think a big part of that is a function of efficiency of their platform. So looking forward, as AOL starts to ramp out, as RPTA starts to ramp out, as wealth starts to ramp out, and foreclosures start to ramp up, I look at this and go, these are the tailwinds. There's a ton of tailwinds. And I don't see reasons why the market won't adopt these things. And furthermore, I think this Blue Water acquisition is a massively important acquisition. I think it's going to not only make us a lot of money as our ability to enable them to scale quicker and bring in more information. I also think that, going to Gary's and everybody else's notes of, and Angela and Jim's notes within the conference call today, was that there's going to be significant cross-selling opportunities. So this is, again, as I said with you, I think this is 1 + 1 = 10,000. So the other thing I really liked about this conference call in particular was right out of the gates, they spoke to cost reductions, rationalizations, and cost controls. They spoke to the fact that the MTE is both EBITDA and cash flow positive, that the Blue Water is both EBITDA and cash flow positive. So all of these elements, and I believe it was Angela said that as of September 1st, they're going to reduce costs by $700,000 a month. Well, that is $2.1 million. So if you get any increase in gross margins, any increase in revenues, and then, and if you look at the cash flow from operations, as I asked on the call, there is a ton of noise in there, like $8 million of noise in there, that are non-cash items that are carry forward issues. And I think the number was like -11. So you take 8, you got 4. You take off 2. Now maybe we're only down 2. Yeah, increase gross margins a little bit. You bring in profitability from MTE. I think we get to, that's how you can easily see that we're at break even or slightly cash flow positive. From a true cash on cash, the other element that I think is important, when I asked about, the related party payments, that is, I think, one of the other critical things is that, they're expecting to bring that up to whatever the lag is, 60 or 90 days to bring it current. So I expect that we're going to actually start to see the cash component of Voxtur's balance sheet start to increase. And I think that's going to give a lot of comfort when you start seeing cash and cash equivalents. A lot of people, for better or worse reasons, discount a lot of the cash equivalents. But I think, we're going to start seeing cash start to go up. So I think, they really spoke to the rationalization, cost containment, and the fact that they're really focused on integration of the companies and increasing cash flow and cost containment.
You made I forgot to ask you about this. You made a post about comparing Voxtur's revenue to other companies in the real estate space, just to kind of put things in perspective, just how bloody it is in that space. Can you comment on that?
Sure. I was going to, I was looking at putting out more of them, but Open Door, for example, which I didn't compare. Open Door is a very complicated one from a business modeling. A lot of people think of it as a tech company. I really don't. I just see it as arbitrage of buying houses, renovating them, and then reselling them. So they have a massive balance sheet. And I think there's going to be a very long lag as to how that balance sheet gets repriced and marked to market. So it's not a worthwhile comparison. Same thing with AIF, Altus Group. Altus Group, for some reason, in some platforms say they have 40% gross margins, but if you go and look at their revenues and then their costs, like within 30 seconds, I think it was on one, I'm using outdated numbers now, but it's probably worse at this point, but they had 174 top line and 134 million went to 101 went to employees, and another 33 or something went to lease and office expenses. So, I don't know how you get to a 40% gross margin when you have you barely have 20%, 15, 22% margins, and I'm not even taking in the other expense lines that are obvious on that sheet. So I didn't do them. Doma is a lot of people see overlaps between what Doma does based on what they say and what we do. They're trying to say that they can do the underwriting of title with using artificial intelligence and a whole bunch of other things. I don't think that's the case. They're not showing signs of scalability. They're not showing signs of capital efficiencies. They're not showing any of those signs, but they are similarly in that they're trying to do closings. They're trying to do title elements and so on and so forth. Their revenues have cratered. Their gross margins have cratered. So their total revenues year to date are down 10%, but their gross profits are down 32%, their gross margins. So that means the actual, like if you're at 40 and now you're down at 30, that has actually compressed 24%. And their net income year to date is down 34%. Real Matters, their total revenues just year to date. So that's taking basically the Q4 numbers and comparing it to the Q2 numbers, because that's sort of the year-end element. And so you have gross profits year-to-date. Revenues are dropped 27, gross profits have dropped 37, gross margins have dropped negative 14, but their net income is down 152%. Whereas, it's funny, you talk about EBITDA, everyone chirps about EBITDA, you got to use net income. You use net income, somebody says you got to use cash flow from operations. With a growing company like Voxtur, cash flow from operations, which normally is a good proxy, there are so many acquisitions and so much noise in that cash flow from operations. The reason I use net income is at least it's a standardized GAAP thing. It's GAAP. It's not adjusted EBITDA. That's not a non-GAAP measure. These are dyed-in-the-wool elements, and also it shows the FX element. And again, as I said earlier, I don't think the FX element is a bug. It's a feature. We report in CAD. We have FX impacts. And because the US dollar is 99% of the time goes up when things go squirrely, if real estate's getting its teeth kicked in and interest rates are going up, you're typically, and that means, a lot of bad things can be happening, then you're going to see the US dollar appreciate compared to the Canadian dollar. And so that's going to be a softening effect. That's just a feature. As things grow, likely the USD comes down, it's going to have an impact on us. But that environment will likely be so beneficial for us. And again, because we have this dual nature of we do well in basically all environments, I think we grow faster in some of those environments. So, Voxtur's total revenues year to date is 0. Gross profit year to date, 4% growth. Gross margin year to date, 5%, and net income is up 66%. And so, yes, I'm comparing those because Real Matters is at least from a business perspective, not from a technology, not a business model, not a whole bunch of reasons, but they deal in appraisals and they deal in title and they deal in refi. So you're seeing them take it in the teeth. Doma deals in real estate and technology around title. I also believe in closings and whatnot. So they're getting both of them are getting smoked. And I think in terms of industry sensitivity, there's similarity between Doma Real Matters and Voxturs. But from a business model and scalability and technology, I don't think there's anything comparable. But those numbers, in my estimation, are a glaring example and proof positive of when Gary and Jim state that they have a stable business and that the different site business units in different environments will outperform the other. As one goes up, the other goes down. As the other goes up, the other one goes down. This is evidence. This is the crash test, and we see that the car survived with barely a scratch.
All right, perfect. Do you have any final thoughts?
Yeah, I think this is not just about the numbers per se, but the numbers in context of an environment, and you have to look outside and see what the industry writ large is doing. And I could not be happier. And I think that when you look forward, you have to ask yourself, what has to be true for things to get better? Well, I think AOL is showing signs already of life and getting picked up. We had that smaller company make the announcement. Voxtur didn't announce it, but they made a LinkedIn thing and whatnot. I think it's right not to post it and make it look like it's a bigger deal than it is. So they played it, I think, correctly. They spoke to the fact that 9 companies are onboarding, RPTA rolling out, Wealth rolling out, and this Blue Water, I think, is a seismic shift. So I look at this and go, I think this is just what has to be true for this to get ever better. I think all the conditions are set, and that all of those, you've got a lot, from a poker hand, you've got a lot of outs for this to have a successful outcome. And I think we have massive tailwinds, and I think that any one of those starts hitting, we're going to see significant traction. It's significant revenue growth, significant gross profit growth, significant gross margin expansion, and we're going to see cash flow from operations go positive and net income be positive, and start seeing cash levels start to grow. So I think it's good, and that's what I'm looking forward to over the coming quarters.
All right, as always, thank you very much for your thoughts.
Yeah, good talking. Talk soon.